Ever felt like you're navigating a financial maze, just trying to find the right path to fund your dreams? Whether it's consolidating debt, financing a home improvement project, or covering unexpected expenses, loans can be a lifeline. But with so many lenders out there, how do you know where to start? And more importantly, how do you know if you even qualify? Today, we're diving deep into one such lender, LendKey, to answer a crucial question: who is eligible to apply for a loan through LendKey? Let's be honest, loan applications can be stressful. The jargon, the requirements, the uncertainty, it can all be overwhelming. That's why understanding eligibility criteria before you even begin the process is so important. It saves you time, energy, and potential disappointment. Now, LendKey isn't your typical direct lender. They're a bit different, and that difference plays a big role in who can borrow through them. LendKey works as a platform connecting borrowers with credit unions and banks. Think of them as a bridge between you and a network of community-focused financial institutions. This unique model means that the eligibility criteria aren't solely determined by LendKey itself, but also by the individual lenders within their network. This adds a layer of complexity, but also opens up possibilities for a wider range of borrowers. So, what are the general factors that influence loan eligibility through LendKey? Let's break them down. First and foremost, credit score. This is a big one for almost any loan. Your credit score is a numerical representation of your creditworthiness based on your borrowing and repayment history. It's a key indicator of how likely you are to repay a loan on time. While LendKey doesn't specify a minimum credit score across all its lenders, a higher credit score generally increases your chances of approval and often secures you better interest rates. Generally, a score in the mid-600s or higher is a good starting point to consider. However, some lenders on the platform may work with borrowers with slightly lower scores, especially if other aspects of their financial profile are strong. Next up, we have credit history. This goes hand in hand with your credit score. Lenders want to see a consistent track record of responsible borrowing. This means things like making on-time payments on previous loans and credit cards, keeping credit utilization low, meaning you're not maxing out your available credit, and avoiding negative marks like bankruptcies or collections. A longer credit history generally demonstrates more stability and can be viewed favorably by lenders. Another crucial factor is income and employment. Lenders need to be confident that you have the means to repay the loan. This is where your income and employment history come into play. They'll typically look for a stable employment history, meaning you've been at your current job or in a similar field for a reasonable period. They'll also assess your debt-to-income ratio, or DTI. This is the percentage of your gross monthly income that goes towards debt payments. A lower DTI indicates that you have more financial flexibility and are less likely to become overextended. Each lender on the LendKey platform will have its own DTI requirements, but generally, keeping it below 43% is a good target. Now, let's talk about the type of loan you're seeking. LendKey facilitates various types of loans, including private student loans, student loan refinancing, and home improvement loans. The specific eligibility requirements can vary depending on the loan type. For instance, with student loan refinancing, lenders will consider factors like your current loan balances, interest rates, and repayment terms, in addition to your credit score and income. For home improvement loans, factors like the value of your home and your equity in it might be taken into account. Another important aspect to consider is the lender itself. Remember, LendKey connects you with a network of credit unions and banks. Each of these institutions has its own unique lending criteria. This means that even if you're not approved by one lender on the platform, you might be approved by another. This is one of the advantages of using a platform like LendKey. It gives you access to a wider range of options. So, to summarize the eligibility requirements for a loan through LendKey, you'll generally need a decent credit score, a solid credit history, stable income and employment, and a manageable debt-to-income ratio. The specific requirements will vary based on the loan type and the individual lender. It's important to note that pre-qualification is often available through LendKey. This allows you to get an idea of the loan terms you might qualify for without impacting your credit score. This is a valuable tool for exploring your options and comparing offers from different lenders. It gives you a sense of what you might be offered before you commit to a full application. Now, let's address some common misconceptions. Some people believe that because LendKey works with credit unions, you need to be a member of a credit union to borrow through them. This is not necessarily true. While some lenders on the platform may require membership, many do not. Another misconception is that LendKey directly funds the loans. As we've discussed, they act as a connector, so the actual funding comes from the participating banks and credit unions. So, who is eligible to apply for a loan through LendKey? In short, individuals with a reasonable credit profile, stable income, and a manageable debt burden have a good chance of finding a suitable loan through the platform. The specific requirements will depend on the loan type and the individual lender, but understanding the general factors we've discussed today will give you a solid foundation. Remember to utilize the pre-qualification tool to explore your options and compare offers. It's a great way to navigate the loan process and find the best fit for your financial needs. With that said, thanks for watching, and until next time.